Alright guys, good morning, and let's get into these Logitech earnings. So, we have the Logitech investor presentation up on the screen. Before getting into it, let's just quickly look at Logitech's price and after hours right now. So, Logitech is currently down a little, close to $6. It's down 4.64% in pre-market before the market's open. For those wondering as far as Corsair, because we have our Corsair position, it's actually not affected at all right now. It's up a little bit in pre-market. I think I know why, which we'll get into during the earnings. So let's start it. So Q1 fiscal year 2022, which just came out this morning, their financial results. The key messages for Q1, so basically let's start with their sales. Q1 sales increased 58% to $1.31 billion, continuing the strong momentum from the prior quarter with double-digit growth across most of their product categories. So really good growth, 58%, it's nothing to sneeze at. Gross margins increased to 43.8% due to strong sales volume, favorable product mix, benefit from currency exchange rates, and remains within their target range, which is 39 to 44%. Their operating profits doubled to $235 million as robust sales growth combined with higher gross margins to offset higher operating expenditures, investments, drive long-term businesses and performance. Cash flow from operations was negative of $115 million as they strategically invested in their own inventory ahead of extended supply chain lead times and rising component costs, and made a $120 million annual income tax cash payment due to the recent Swiss tax reform. So because of this big payment, it pushed them into the negatives. They're also, obviously, they're saying they're increasing their inventory because of supply chain issues going on. I don't know if it has to do with the chip shortage as well or what it is, but because of that, they want to make sure they have the inventory they're going to need for the rest of the year. So let's get into this. Let's go down. So they basically just go over some of their products, their video collaboration tools, Logitech Scribe, Jaybird, some headphones, wireless headphones they have. Let's get into the results though. So basically, strong year. Net sales clearly went from $792 million to $1.312 billion this quarter, 66% increase, 58% if you're including all currencies and whatnot. The margin is up, as we said, 43.8% to 39.2% of last year's quarter one. So everything is moving up. So that's, when you see that at first, you'll wonder, all right, why is the stock down in after hours? And I think I know why. So, sorry guys, just had this bad cough for the whole week, so it's been annoying. The operating expense, $340 million, so they are spending more than they spent a year ago, which is fine because they're growing, more sales, more basically more expenses, more employees, etc. Operating income up to $235 million from a year ago, $117 million. That's a 100% increase in their income, operating income, and their operating income percent margin is 17.9%, so much better than the 14.8%, 3.1% better. And earnings per share did really good, $1.22 in earnings per share, 91% increase year over year. If we just go to what people were expecting, just so you guys know, it was a beat. People were expecting on EPS 93 cents. They had $1.22. It's a 31% upside. As far as revenue, people expected $1.2 billion. They had upside there. Now, the upside on revenue and the upside on EPS, although they beat the numbers clearly, it's not as big of a beat as previous quarters. I mean, if we look, they've had beats of 141%, 221%. So if we look back, Q2, Q3, Q4, Q1, the beats get smaller and smaller. So 221%, 141, 34, 31, and pretty much same thing here, a little scattered, but 48%, 34%, basically 34%, and then a 9% beat. So they are beating, but they're just not beating by as big numbers as they used to. But this is the part that I'm most excited about. So this is talking about each category and how it's growing. So because I'm not a Logitech investor and I'm invested in Corsair, the things that matter to me were keyboards combos, PC webcams, since Elgato dropped a webcam now, and gaming. I mean, those are the things that mattered most to me. So if we look, keyboards and combos were up 44%, showing that people, they're still selling more and more year over year. The PC webcams is growing insane, actually, 73%. So that is still high growth, which I like for that new Elgato product. And gaming up 76%, more than any category here. Gaming is up the most. So I think that's pretty important to show that of everything they're in, gaming is the highest performer as far as year over year growth, which is everything Corsair has to do with. Whereas, most of their business is growing pretty well. 84% on gaming if you're not including like change of different currencies across countries. But so best performing thing as far as growth was gaming. Everything else for the most part did good. I mean, some things like smart home, mobile speakers were down year over year, but most of their business was up. So that's good. But the things that matter to me, like I said, with Corsair, all up very strongly. So large secular trends continue to drive broad-based growth, and I think that's what we're going to see with Corsair. Gaming, driven by a strong product portfolio, resilient gaming demand. So gaming demand, they're saying, is still very strong. So balanced growth across all regions, important to know just how things are going in different parts of the world. So growth seems to be going, it seems to have obviously, after last quarter, Q4 seemed extremely strong for them, and it's come down, but it's still, even on this downtrend, like we're looking at, 40, what was this, the worst place did like 50% growth or higher. So, growth seems really strong, which is what confuses me. When you see growth so strong, it's kind of confusing to see that when you're going to see what their guidance says. So that's what really confuses me. So gross margins within target range. Long-term target range, they basically want their gross margins to stay between this like 39 to 44% range, which they were over the target range, but they knew they'd eventually dip back into it, which is what they did this quarter, and they're good with that, which it's a great gross margin, so no issues there. Let's see. So investing for the long-term growth, like I was saying, they're increasing their sales and marketing spend. They're increasing their research and development. They're increasing their costs for general and administrative. Everything goes up. The thing that's good is because sales go up, even though these expenses are going up, they're becoming an overall less percentage of their sales. So a year ago, all these things made up 2.8% of their sales, whereas today they only make up 2.4% of their sales. And so that they're going down as a percentage of sales, while at the same time going up in expenses 76%. So it just shows you that the business is pretty healthy when it's able to do that as far as their growth in sales. A lot more R&D spend, 38% more. They definitely want to stay ahead and keep the lead they have in a lot of these industries. So cash balance, it reached $1.5 billion, up $700 million due to a strong profit growth. So their cash balance is doing good. Cash flow from operations was negative $115 million, so we talked about that before. It's because they had to make this $120 million payment. Rather than paying quarterly, they paid the entire annual payment up in one payment, and for a Swiss tax reform that's happened. Now, I'm not too familiar with what that is, what tax reform the Swiss did to have this as one big payment, but I can look into that if anyone's interested. We continue to expect our full year cash flow to approximate our non-GAAP operating income. Q1 we spent $55 million in share repurchases. So they obviously they are still doing share buybacks, which is great for shareholders of Logitech that they believe their stock is still undervalued enough that they think it's worth buying with the cash they have rather than putting it elsewhere, rather than dividends, rather than anything they think they can acquire or whatnot. They are doing buybacks. So let's see what else we have here. All right, so this is what I wanted to go over: reaffirming fiscal year 2022 outlook. So I'm gonna just take you to a quarter ago for them. So this is 1 quarter ago. So last quarter they said that the outlook for 2022 would be that they're gonna have increased operating income of $800 to $850 million, versus the original outlook was $750 to $800 million for operating income. But they said that they plan to remain flat, plus or minus 5% on sales growth. So off of higher sales base. So I was like, all right, they're gonna have basically flat, maybe down sales, but they're gonna have more operating income. So they're gonna maybe make more margins off their products. They're gonna lower their expenses. It's like, okay, so this was a quarter ago, and then if we go today, they're basically reaffirming what they said last quarter, which is we're going to have negative 5% to plus 5% on sales growth for all of 2022, but our operating income should still be 800 to 850, so that's slightly higher than they originally thought, but nothing new compared to last quarter. What doesn't make sense to me is how do they expect to be flat in sales growth or even down in sales growth when the first quarter of this year has sales growth of, let's go back up there, 66% up. So that's what, I don't know, it throws me off. I might be missing something. It's kind of early, so I don't know if there's something I'm missing, but are they expecting the rest of this year for them to just be horrible? Like, how do they get from 66% growth year over year to we might have less sales than we had last year? Just doesn't make sense to me. Now, in comparison, just to show you, I did pull up Corsair last quarter's guidance. Unlike Logitech, they increased their revenue numbers. So their old guidance was 1.8 to 1.95 billion, and they actually brought it up to 1.9 to 2.1 billion. So they were saying, look, we're going to sell more product and grow our business, and we're also going to make more operating income. They increased everything, their adjusted EBITDA, they increased their operating income, adjusted operating income, and their net revenue. Whereas Logitech seems to say, look, we'll make some more money than we thought, but our sales aren't going to grow, which, their sales grew a lot this quarter. So I think it would have made sense. People probably would have wanted to see, you grew all this much, maybe you'll change that forecast for sales growth, but they didn't. So that's what I think the market doesn't like. I think the market doesn't like that what's going to happen for the rest of the year after such a high growth quarter, that you're going to have less sales, than last year at the end of this year. That coupled with the fact that the beats are just not as strong as they were. So that's what I think's happening with the stock. That, and plus the stock, I think, was slightly, the reason we don't own it is I do think it's slightly overpriced for today. If you look at Logitech just in general, it's had an amazing run. It's been going up. This is usually like a good stock that's not growing at like crazy rates. Unlike Logitech's actually grown much better. So, but it's had a good rise. But obviously with everything that happened in 2020, it really pushed the stock up a lot. And because of that, it has some higher multiples. So even their PE is 21.92. It's not bad, but I know their forward PE is much higher than that. So that's the issue. There's their price to sales is much higher than other companies that are in similar categories. So their metrics just are a little higher than everyone else. Great company. I like their products, but I can understand why it dipped a little. If I saw this, which me looking at this, if I was a shareholder and I saw this again this quarter, I would understand before the quarter They wanted to be safe, say, hey, look, last year was a really great year, maybe it'll be the same. We don't know how much we can grow. But then after the growth they had this quarter, this doesn't make sense to me. That's the only thing. So I'd be worried too. And I think that's why we're seeing, if we refresh this, 5% down in pre-market for Logitech. And I think the reason we're not seeing anything, it affects Corsair, and we see Corsair in pre-market up still a little bit, is because those categories, one, their guidance off the bat last quarter was much stronger, and two, they're basically all the categories Logitech talked about in this report that have to do with Corsair are up extremely strong, and gaming being the strongest, like we spoke about. So I feel really confident in the Corsair position that I have. This earnings report made me feel even more confident. I was, wanted to really make sure and see, how gaming and whatnot is doing. So yeah, if you guys have any questions or anything, happy to answer them. But I'm pretty happy with this report, and as far as it goes for Corsair's position. And yeah, I think that basically sums it all up. It's 8:20 right now, almost 8:16 a.m. So market, we got a little over an hour before market open, and should be interesting to see how Logitech performs for the rest of the day, what they say on TV about it on CNBC and whatnot, and what if Corsair, does get any change in price based on just overall headlines and whatnot that might come out about Logitech over the day. So should be interesting. I'm going to keep an eye on it, but I remain super, super bullish on Corsair. I am actually, I've been buying a couple more options, a couple more shares. I definitely have been building this position pretty strongly. So yeah, I think that's everything. So until next time, guys, thank you guys so much for joining me, and we might hop on live later today. There's a lot of big earnings today. We're gonna have Apple, I believe, Microsoft, Google, Alphabet, Visa. There's so many big companies having their earnings today. Today's gonna be a crazy day after hours, so we might jump on for that. If you guys are around and want to jump on, we might do that and just take a peek at everything, see if we find anything interesting. All right, see you guys later.